My name's Glennie and I'm co-manager of the Aberdeen UK Smaller Companies Growth Trust. The objective of the trust is to invest in UK listed smaller companies, which we define as the bottom 10% by market cap of the UK market. We think it's really interesting because there's still a lot of dynamic quality growth businesses in the UK small cap space. And by investing in that space over the time and through the trust, we've been able to deliver shareholders through the long term really attractive long-term growth returns. In our team, we've run the same investment process for over 25 years now. So that's been tried and tested through 5 economic cycles. We define our process as quality growth momentum. We look to run money in small cap in a lower risk way through our focus on quality through an economic cycle. We look for sustainable growth businesses, companies delivering growth year in, year out, both organic and complemented by bolt-on acquisitions. We look for momentum, so we want companies with increasing earnings expectations who are meeting and beating expectations. And we also look to run our winners. We also use the matrix within our investment process, and this is our in-house developed stock screening tool, which helps us both with stock selection and with portfolio construction, and also helps to remove the behavioural biases that you can get in investment. Valuation is embedded in all of our investment decisions. We also look at ESG aspects. And we tend to be long-term investors. So for a new idea, we're thinking about a 3 to 5 year time horizon. Often holdings are held for much longer than that as the investment case develops. I think one of the great things about the portfolio is actually the diversification that it delivers to investors. So really we have a very, very broad set of both companies and sector exposures. And importantly also in terms of revenue generation. So around half the revenue in the portfolio is actually generated overseas, but you're being able to access that through the UK market, which we believe is significantly undervalued relative to other geographies. We think the diversification that we have helps to create a more stable return for investors. The Aberdeen UK smaller companies portfolios are some of the biggest assets in that space in the UK market. We think one thing that differentiates us is how long we've run that same investment process. And we think that's really important, particularly through tougher times or uncertain market environments. We've run our quality growth momentum process involving the matrix for over 25 years now. And that's now been tried and tested through 5 economic cycles. We think that helps us to understand and also to be clear to investors the times that the process will struggle in and the times that the process will thrive in. And also we've been able to demonstrate over the long term we've delivered attractive returns relative to the benchmark, and we've also been able to deliver outperformance in all different types of market environment, whether that be strong markets, moderate markets or falling markets. I've spent all my career in investment management and focused on the UK space. I first started at Aegon Asset Management, where I spent 6 years there working on their UK team, starting originally as a graduate. I then moved to Standard Life Investments, and I've been with the business, which is now Aberdeen, for around 11 years. I joined the smaller companies team in January 2016 when I joined Harry Nimmo and worked with him on the UK smaller companies portfolios since then.